what sort of trade could we do? NVIDIA is already a big winner of the chip shortage and will most likely continue to be. As a trade, let's pass on NVIDIA. Just it's an $800 stock. It's not like a Tesla. I remember Tesla when it was like an $800 stock, and that thing was extremely volatile. I don't think NVIDIA is there yet, but I think NVIDIA can move like a Tesla. AMD had a run up like NVIDIA, and that meme is also getting a sell signal like NVIDIA. Both of these stocks should trade higher, but we prefer a trade in Intel instead. That's a very, very good selection, I think. If you compare AMD to Intel, right? This is a beautiful side-by-side comparison. And we can. I remember when AMD was an $11 stock, and that was sometime, I want to say in like 2018. AMD was just 11 bucks, 10 bucks. Let me pull up a chart on AMD. And I mean, to be fair, it hasn't just been AMD. It's been NVIDIA. It's been really all of them. So let's see. AMD. So here we go. This is what I mean. This AMD stock, I mean, it really used to be cheap. 2017, 2018, even though, I mean, this is a pretty big rally in AMD, but it was a rally from $2 and change to 15 bucks. That's pretty big. But now look at the price. I mean, it's $90 now. So AMD has had its run up. Now, from a technology perspective, AMD has definitely come out with superior gear. At least that's the perception from the technology folks over Intel. But that doesn't really hold. I mean, that's just the opinion of a particular group of individuals. I think that the new AMD chips are better than the Intel chips. I think Intel is, I don't know, it's one that has not yet had such a big run up. Back in 2018, this stock used to also be right around the same price. So it hasn't had that giant volatile move that the others have. As you can see, if we go back to a similar time frame, somewhere around 2017, 2018, we can see that the price was roughly the same. So it's really done not much lately. And we're starting to see hits for NVIDIA in the wiretapper. So I think getting a position in Intel, since we already know that the wiretapper's picking it up, it hasn't made it to this list yet, but it's certainly in these. It seems like quite a nice trade to do. If you look at the options, you can see a massive unusual options activity on the 60 strike calls. I think considering joining that position with a purchase of the 60 strike calls for 95 cents or so, that seems like a pretty fair trade. And here we go. These are the 60 strike. Wow, that has some size. If we pull it up in pulling up an option chain, INTC. Let's see where those are trading. So they have not gone up by much. Let me make sure Jonathan moves. Looking, yeah. So we're looking at the August ones. They're 94 bid, 97 ask. And something interesting is I think this screenshot was either taken on Friday or over the weekend, I believe. Not really, I'm not sure, but based on that, if we look at the open interest, it was 36,000. And volume wise, that day there were 14,000 almost 15,000 options that traded. If we go to the actual option chain currently, what we can see is that the open interest is now 44,000. So what that tells me is that the bulk of these 14,000 options were opening, right? The volume was not closing out these 36,000 already open contracts. And no. Instead, it was adding to it. So yeah, good point. Yeah, it had a big surge. So I don't know. I think Intel can definitely move. And as far as it moving up and then coming back down, that's trading. The question here, or the comment by Matthew, is that Intel had huge 60 call on the 716 expiration. weeks ago, and it flopped hard. It's coming up again. I'm wary. People that are wary usually, unfortunately, don't have conviction for a trade. If you don't like the trade, Matthew, I would suggest to not take it. If you don't like the risk reward. But I like the trade. Jonathan and I have spent time researching this, and this is the one we like. If you don't like it, there's others. So yeah. And one thing that I will mention, this is part of the and this is kind of the way we trade these instruments, these options, is if you purchased let's say the 60 strike, right? If you purchase those options, you have 36 days left. Yeah, sorry, 39 calendar days left. Currently, those options are trading with a 28 delta, and the difference between strikes is 2.5 points. So, using the volatility visualizer tool, one thing that I really like about Intel, and it's pretty visible here, is that its volatility in terms of how wide apart these two lines, the upper line and the lower line, get. We can see that during this month, which was May, during the month of May, the main options, we're expecting approximately a 10% move up or down, $7 from the open on that month, that monthly option. What the market was pricing in was, hey, we think Intel is either going to go up or going to go down by approximately 10%. And the actual dollar amount was $7. As you can see, as soon as it hit this line, it paused. Let me zoom in. These lines are definitely not arbitrary. They are taken from directly from what the options market is telling us. So okay. So if we go back, I don't think that this is consequence. I don't find it surprising at all to see that this line that was drawn here ahead of time causes this stock that's clearly having a big sell-off to pause right here. And after it breaks down and goes below it, notice what happens. This what I'm calling a line turned into resistance. And it's already outside of the line. I'll explain what this means in a second for anybody that's not aware of what this represents. But once it's outside of these lines, any movement is most likely going to be quite volatile and violent. And the reason is because what these lines represent are an at-the-money straddle. So what you're looking at here is the volatility visualizer. This tool does many things, but the main thing that it does for us is it takes at the very beginning of the option cycle. So for example, the July options have 4 days left. If I go back to my chart, we can see that we've been in the July options since whenever this date was, which it was, boom, right here on 6/17/2021. So that was when these options ended and the July options, the current options that have 4 days left, started. So if I fast forward 4 more days and we get to Friday, 13, 14, 15, 16. So on 7/16, these lines will end and a new set of lines will be plotted based on whatever the market is expecting. And the nice thing about it is that we can see that, for example, going back to right before 2020 closed, we can see that the expected movement was very little. So as the year progressed, right, as 2021 came, notice that the distance between this white line, which is where the cycle starts, and the upper and the lower band was very small, and then it started getting wider and wider and wider. And likewise, afterwards, whenever the May options ended and we started the June options, notice what happened to volatility. Volatility shrunk in these Intel options. And likewise, in the July option series, volatility has is quite low. So this is but just from using this this point of view, this vantage point, if you know that on this date the July options will end and the August options start, if let's say that day arrives, and instead of expecting to move $5 higher or lower, this is because that's what the volatility visualizer is telling us, is that we're expecting to move $5 higher or lower. But what have we done all month? Pretty much nothing. We've been flat, as you can see. So when the August options start, it would not surprise me to see the distance between the start and these upper and lower bands to be much wider. And that is based on the premise that volatility is going to expand. And thus the expectation of movement higher and lower, it's represented in the options. Now, some other interesting information that we can gather here is that throughout, let me see how much data. I only have 1 year of data plotted, but if you plot, I don't know, like 10 years of data, or just more than 1 year, so you can actually get something with, well, let's do 5 years, something with statistical significance. But the metrics will change. And what the metrics tell us here is that pretty much each time we start a new set of monthly options, once again, in 4 days, we'll start a new set of monthly options, and then once those end, another set will start. 53.33% of the time in the past 5 years, the price touches either the upper band or the lower band. So close to half of the time, it actually tags it. And we can see that, right? We can visually see that, for example, during this month, it didn't hit any of the upper or lower bands. It didn't do it in this month either. It didn't do it in this month either, but it sure as heck did it in this one. It sure as heck did it in this one, and so on. Out of the times that we did touch it, 50% of them hit the upper tag, and 48% of them hit the lower band. And 46% of the time, there was no touch at all. Then the most important metric of them all is what percentage of the time that the options, or in this case, the price of the stock, close inside of its range. If you are an option seller, if you're selling options at the beginning of the, whenever the option series starts, if you want to sell the at the money straddle, in this case, assuming we would have done that, which personally I would not sell it, but this is just one way of looking at it. What this is showing us is that somebody who sold the at the money straddle at the very beginning of the option series collected $5.10 for doing that, and pretty much throughout the whole month has been getting paid. So I tallied that up, going back to however much data you want to throw at this thing, and what we see here is that what the winners are and what the losers are. If you're an option seller, in this case, collectively over the past 5 years, your total has been 97.40 or 0.4 points that you've collected times 100. Right. So if you sold this straddle and you got back and you collected $5, that's for one lot, that's $500. So that's how much has been made by the option seller over the past 5 years, assuming they sold the at the money straddle at the beginning of every month. This also shows us what the averages are, what the average amount of, the option seller on average collects $1.62 over the past 5 years. That's in the stock intel, but also on average loses 86 cents. Now, this is also another important metric. I know I've said that already, that this is one of the more important metrics, but these are the two I look at: close in and these two right here. What has been the biggest winner and what has been the biggest loser from an option seller's perspective? Right? Think of it from an option seller's perspective. The most amount that has been won has been $8.05. Right? So if you've been literally selling the straddle every month for the past 5 years, the month that made the most money for you was a month where you collected $8. However, there was 1 month where you lost 13.96. So who wins when this occurs to the option seller? If the option seller lost 13.96, what must have happened is that price actually, let's say it was an upside move. Price got to the edge of the straddle. If price moves beyond this line, or if price moves beyond this line to the downside, that's when the option seller begins to lose money. the option buyer, which in this case is us, made a giant return. So that is why when price moves outside of these lines, it tends to get quite volatile. That's because as soon as that happens, somebody's losing money and somebody else is making money. So the people making money want to continue pushing it outside of the bands, and those that are losing money need to either hedge that position or do something. Most of the time, what ends up happening is those that are losing money have to hedge their positions, and in doing so, they move the price in that same direction a lot higher. So for that reason, based on the fact that Intel has this ability to completely outperform the at the money straddle by a lot, that's huge. Over the past 5 years, I mean that gives me some more reasons why this is a good name to hold options. Another one that we can see here is the starting volatility and the current volatility. So here's one other important thing that you can, I guess, glean. The lines that on the chart were drawn using the starting volatility, which in this case happens to be 30%. Currently, the volatility is 39%. So it's precisely for this reason that, come August, I am expecting for this distance to be, much, well, maybe not much, but notably more than what it was for July. It's due to this rise right here. And the edge tools, if we were using the edge tools, for example, we see that happen live, dynamically, right? We see these bands moving in sort of like in real time. What this tool does, the difference is that it's a measurement taken from the very beginning, since that's how some institutions trade it.